we did see the earnings report card where we've seen capex actually aid revenue growth. The power availability, though, has slipped year on year. We're going to be talking about the road ahead and the recent announced reforms with Mr. Anil Sardana, the MD and CEO of Adani Transmission. Mr. Sardana, good morning. Thank you so much for joining us live today on the market. Now, like I was pointing out, the revenue growth has been led by expansion of capacity. So for the rest of this fiscal and the new fiscal, what exactly is your capex plan?
So good morning. Thank you for having me over. Adani Transmission has always been maintaining a very good growth rate. So as you rightly said, during the 9 months period, we have been much ahead of our capex plan. We had projected during the year close to about 5,000 crore worth of capex, but we have already achieved 5,000 crore in 9 months period. And hopefully we should be crossing more than 6,000 crore. And we have added close to 3,000 circuit kilometers of lines and a healthy capex in our distribution business in Mumbai. So we will continue to hope that we will maintain upwards of 15% CAGR growth in revenues as well as in EBITDA terms. And that's pretty healthy for us.
Now, the availability of power that slipped marginally year on year, reason for that slip up, and were these planned outages? Did you have to reduce it simply because of the Omicron variant? And if you can give us any guidance on this.
No, it's not like that. See, when you look at the quarter-on-quarter variation in availability, we don't get any incentives beyond 99.5%. So what we do, since it's not going to impact our incentives and revenues, we spread our overalls, scheduled overalls, in a manner that we maintain it upwards of 99.5. And that's exactly been the scene. And therefore, on an annualized basis, it will continue to be always very, very healthy. In fact, in Mumbai, in the distribution segment, we always maintain it upwards of 99.9. In transmission, we maintain it upwards of 99.5. So one does not have to take into account the quarter-on-quarter variation in availability as long as we have earned every nickel and dime of incentive. That's the important point.
Mr. Sardana, what I also want to understand is what really is the strategy going forward? As a business, how is it that you expand next? And where is the next leg of growth really going to come in from? Is it going to be the EV charging infrastructure, for instance, which many of your other peers as well are already into?
This is a very interesting point. Since we are in the two paradigms of our connectivity business in the power sector side, and I will typically term it as the last mile and the middleware. On the middleware side, which is the bulk transmission systems, there is going to be ongoing growth because of what we call as general network access, which is what has been announced by Government of India in the last quarter, which means till now the transmission was planned top down. Now the transmissions will be planned bottoms up, in the sense that every customer should have the choice to source power from wherever they want. And therefore there'll be a spurt in transmission investment. So that's the bulk part. On the retail side, after we acquired the Mumbai business, and in the last quarter, we acquired the business of distribution in the Mundra place, which will now expand to the adjoining municipalities as also in the areas which will get us much larger growth there. And of course, this last mile business is going to open up. We all know that in the power sector, as a country, we're doing well on the generation side, we're doing well on the transmission side. What we have to actually reform is the last mile. And that's where the company's presence is going to really help multiply and grow in the days ahead. In addition, you talked about new adjacencies. You talked about electric vehicle charging business. There is also district cooling system. There is also home automation. All of these are businesses which will grow in the years ahead. Today, one does not see much uptake because EV charging will come once the electric vehicles start to come on the roads. And that too, today it's been mostly two-wheelers, which normally are able to provide the entire charge at their homes itself. And therefore, they don't need public charging infrastructure. As a distribution company, as a city gas distribution company, we have a lot of ground level presence. And therefore, electric vehicle charging in the public space will be one of our growth areas once we start seeing spurt in the electric vehicles. Right now, what we are doing is to work along with various players, like you saw us launching Yulu product, which is for the two-wheelers in a big way in Mumbai. We will continue to do so, but we are very focused on the fact that it must be timely so that the shareholders don't see just the cost paradigms, but also commensurate revenue and profitability paradigms.
Quite interesting. But tell me, the other way to grow obviously is going to be acquisitions as well. Do you really see Discom privatization as a big opportunity for you guys? And would you be interested if at all this were to get kick-started?
Absolutely, very pertinent and very apt at the current times. When you look at the acquisition route, acquisition has been one of our very formidable growth paradigm in the transmission side. And we, of course, acquired the distribution business in Mumbai. We acquired the distribution business in Mundra. So we will continue to look at various holdings of private sector in the distribution as a possible growth opportunity. But more important is the two other aspects that we need to keep in view. One, that the amendment in law, which is right now in front of the parliament, is going to de-license this activity. Once it de-license, you will have the opportunity to go into the current distribution area. Of course, the territories will become much smaller. Now they're going to be even permitting you to go into district areas. And therefore, there'll be a lot of opportunity for us to expand. In addition, assuming that that takes time, there is that second license opportunity that we are now contemplating in several areas where the challenges for the customer are far more formidable and therefore room for us to provide delta and differentiation to the customer is much higher. And those are the next work that we are doing, which will of course come in handy just in case the law gets amended. And in the situation where the law gets delayed, we will work towards the second license in several cities. So that's certainly one of our very important growth areas, and company is going to make sure that that becomes the next big opportunity for us.
Good morning. Wanted to understand what the outlook is when it comes to the borrowing costs and what your debt levels are. How are you looking at plans on that front going forward in terms of the trend?
As you know that we have two key businesses, two segments. One is transmission, the other is the distribution business. In the distribution business, you are aware of the fact that we had done sustainability linked bonds and we've provided the funding in such a way that for years together, there is a funding available. It's like a pot which we can draw on. And at the same time, the revenue that we earn because of capitalization every time is good enough to contribute to the equity. So therefore, the distribution business we have taken care of in terms of the growth aspects by funding it through methods which will give us, it's almost like an impressed funding. So there is a line of credit which we'll keep drawing. And this is for the first time that we took to sustainability linked bond, as you're aware, and therefore ESG agenda continues to drive this to a very competitive level. At the transmission level, based on the projects that we acquire, we do construction funding, which makes sure that we have again a similar way that 18 months or 24 months of construction part is funded through these construction bonds. And once we commission, we go back as a bouquet of products to a very long-term infra funding with the amortization, which is very friendly, and the cost, which is very low. You're aware that last we did was 7 assets with US private placement. That was again the very first in India, and very competitive 30 years long funding, which was almost like equity funding at a very low cost. We'll continue to do so. More important point for our listeners is the fact that we maintain, as a management, we make sure that our net debt to EBITDA will always remain lower than 4.5. Despite the fact that for investment grade rating, we are permitted to go up to 5.5. But as an internal discipline, we'll make sure that we'll maintain it up to 4.5. And that discipline is holding us in very good stead.
Okay, fair enough. And what is your outlook and take really on Discom privatization as an opportunity in the country? Are there any privatization bids in the pipeline? Would you be interested?
Yes, right now, the bidding that's happening is related to the union territories. As you know, that Government of India announced that let's become role models for the states to emulate. And therefore, the union territories have been put out one by one. We have had 2 bidding that took place, and now the Lakshadweep bidding is right now on, and subsequently we will see other 4 union territories that will come through in short duration. And we will be certainly very keen on the distribution business. As I said, this is one of our key and core strength, and we will make sure that we exploit that to the right point. And of course, as I said, we will also look at second licenses at some of the places where the delta advantage that we can provide to customer is significant.
Sardana, it's been a pleasure interacting with you and understanding how you are looking to, grow the business and what the game plan is. Very categorical that the net debt to EBITDA will remain below 4 to 5 times. And they're saying that this transmission sector growth is going to be driven by growth network access plan of the government. They have been very upbeat on their overall capex plans and will continue to target availability of over 99.5% at the portfolio level.